Alright guys, this is my second video today. I just want to follow up on a trade that I made. So I'm going to talk about real quick gold because the oil trade did not work out. I actually did not get back in because I was really focusing on gold over here. So oil, as it came back up for that retracement to the top of this or the bottom of this breakdown, it didn't hold. It broke right through there. So right now I'm actually looking for a retracement back down and possibly a buy up into the top of this channel. So you know, when you got a downward channel, it could hit the bottom, it could hit the top. A lot of times if it doesn't move to the downside immediately, it'll move to the top of the channel, and that could be another short opportunity as long as there's a resistance in that area, and you just got to be kind of cognizant of that. So let's go to gold real quick. So with gold, like I said, short was the opportunities that we were looking for. However, intraday, as day traders, we do look for any kind of move that could happen even against us. So in this case, we had this trend. I mean, it kind of immediately came down at the beginning of the day, and I thought it was going to kind of move down even further from this sharp up move on Friday. And it did kind of break down initially, look for a short on the way up over here, ended up getting stopped out, and then it kind of ranged, came back down to the top of this range right here and didn't break it, and it just kind of stayed sideways for a while. So then I actually ended up getting stopped out up here at the top where I had the original stop at the 1098.5 in that area. And what I saw was, okay, well now I need to change my bias, because you know, intraday within this day, not overall the gold is still in a downtrend, and there's probably heavy sellers up above, but intraday within at least the next couple hours, this could go either way. So we're looking for more short opportunities as it comes up. It's probably another one right here that I just missed, but I'll explain why. And so my stop was here. I got stopped out, and as you can see, it actually broke out of this range, which is near the highs of or at least where the opening range was right here, right? So as soon as it came up, it immediately came down, and I wasn't looking for a short opportunity anymore. I was looking for a reversal and looking for a long over there actually. So what I did was, so this is a Renko bar chart, and basically this range right here where the opening and the dip down here earlier at 1193, actually 1193 was right here, and you see kind of broke above this level here and stayed above it, and then once it broke above here where I got stopped out at, it came back down. So I looked at that as maybe a breakthrough to the upside, right? So what I did was I did a quick Fibonacci, and I said, okay, well, if it does go up, it's going to retrace back down at least to the 61.8 to 76.4, and it did. And I ended up buying about 4 contracts, and then it came back up again, and I bought another 4 contracts to the upside. And my target and my stop was pretty much like right here, right below that point of control. And my target was going to be, if I pull out here on the 5-minute, the next highs or this range right here, right? Because we just broke this channel, so intraday it could move up to the top was my bias. And I thought, okay, where did it kind of stall previously? Well, it stalled somewhere around this price range here. It kind of spiked up, came down, spiked up, came down, and then it kind of supported here around the 11.026, and then it shot back down from there. So I figured, all right, 11.026 is a pretty good target. Okay, moving up from where I was here, which was about 11.98. I can look and see exactly where I got in at later. But then I lined it up, and I said, okay, is that coinciding with some areas over here? And if you look over here, the previous week, you see it kind of dip down into this area, bounce up, right? Shoot up above it, below it, but then it kind of supported right here, right, before it shot back up again. and then it came back down again on Tuesday or Wednesday, and then it bounced from here, which was a support level, which is now resistance. So it's right around that 1102 to 1106 range. Most recent, I guess, target for me would have been the bottom of this range here, which would be the most recent day, which was last week Friday, right? And then from there it broke down. So if it was going to go back up, I would figure at least go up to this area right here if it's going to break back down again, right? So fast forward moving again. Once I entered here, that was my target, and as you can see, look how quickly after it came back down. These are 5-minute bars here, 5, 10, 15, 20, 25. After 25 minutes, 30th minute, and I can go into the minute, down to the minute, so you can count exactly. So came up, came back down. There was another buy opportunity down here. So about 11:55, let's say that was a buy opportunity. 15. So got 20 minutes, and then let's see, 21 minutes. So after the 20th minute, this thing broke above the previous little bounce right here, right? After it came down, and I was thinking, I had my stops down here because I said it broke above it, came back down, and I was looking for this thing to just shoot back up like that after it broke this area, but it didn't quite get up there, so it came down again. So I was thinking, all right, as it came back up again, if it's to fail, then let me put my stop down here, because if it fails, and it's going to move down to the downside. Instead, what it did was 2 minutes later, and then in the third minute, broke above this, because there was probably a lot of stops here, because there were probably some people shorting and putting their stops right here, heavy. Like I said, overall, this is a short market. So as it kind of came up and knocked those stops out, this price movement went through the roof, and you can see the volume overall during the day really low, a couple hundred, and then here we go, 2,000, all right, over 2,000 contracts, and that wasn't people buying, guaranteed. It was probably buy stops, people that was selling. If you sell, you put a buy stop, right? Because you buy limit to make money, and I put a buy stop to stop the bleeding, losing money. So all those buy stops that were selling right here probably got stopped out, and this thing just went to the upside really quick. And that was a matter of less than 20 minutes. When with 8 contracts, I have my cumulative profit right here that shows on the Ninja chart. So I just made about $2,110 today, all before the market's open. But like I said, intraday, you can see things happen all the time. Now what I would say is, and I made these zones earlier, because these are my resistance and support zones. So I'm not going to go into too much detail, but if you look back, you can kind of see where it ranged above and below it. So I saw where price broke through or broke below, so I created this range, this zone, as the price came into it as an opportunity to short, because you could have shorted here at the end of Friday, but it's the end of the day, so you don't want to hold on to a position, so not a good time to trade. So the next opportunity would have been, yes, to possibly short here, but it didn't come all the way up here. I shorted up here, and it didn't come back down the way I wanted, because what I wanted to do was short here, wait for it to break at these lows here at this intraday value, and then kind of shoot down from here, because as you saw, price at the end of Friday just shot up. So I was thinking, all right, probably not a whole lot of buyers here. I mean, a lot of buyers here, but strength in the market could be crippled if this thing would reverse on you. So that was my thesis. It didn't work out, but I put my stop. So I lost a little bit of money, right? But we all risk, the reward to risk needs to be proper. My risk was very small, and then when I changed and swapped my bias to the upside, I saw this break out this time instead of a breakdown, right? And so once I saw that, I looked for another opportunity, and you got to think, it broke out over here earlier, actually, right? I was shorting because I thought, you know, this is the top of the range here on Friday. Let me look for another short opportunity if sellers are really in control. And it didn't happen. It failed. So you got to think, who's really in control at that point? Buyers are in control, because you see every time it came back down for a test at this top of this area where it initially broke. See where the bottom of that candlestick is? How right here, let me zoom in. See how the bottom of that candlestick where it shot up? Well, look at that price level at 95.8. Look at where it hit, 95.8, a little bit before 95.8. And every time it hit it, it came up. It came up, right? And it bounced up a bit above there. So if anything, if I were to have gone long here, or if I would have gone long after it came back down again, because you could have maybe another Fibonacci retracement here, right? You know, not quite 62%, but a little bit below 50%. If you were to take that trade because you thought longs were on this breakout, then, you know, you could have put your stop below here, especially after it failed to break down here, okay? And so after that, you got to think, if it breaks out again here, you know, this thing could really move up to the upside, right? So that's why I swapped my bias, because I really figured that buyers, at least intraday, were in control. And so when I saw this retracement, it was a perfect opportunity. And as you can see, as I showed you earlier on the Fibonacci, you see it kind of go up. I look for this thing to retrace back in perfect zone between the 61.8 and 76.4, right? So buy in anywhere here, put a stop slightly below here, right? Just a couple of ticks. That's the thing, is like I didn't even have to risk that much. And then my reward on the other side was like tenfold. So, and it happened very quickly. And these are the best kind of trades, you know, where you don't have to wait like all day, where you get into a trade, you have conviction, and it just moves in your direction. And as you can see, it hit my target, 11.026. I think that's where it was at. Man, it hit 10 ticks above there, but you know, I wouldn't have known that. And if I go back, like I said, look at where my target zone was, right here, 11.026, 11.27, right? Came up a little bit higher than that. I mean, let's even look at where exactly it stopped at. So 11.037. Let's go look back to our left. Okay, let's focus on where these areas were. Look right here, where I kind of broke down at the bottom where my target was and came up. It came up a couple of times, right, to that 11.035, 6, 7 area, right? Look at that. And then it broke down from there. And as you can see, it shot up there again and then ended up failing again, right? So there's some sellers here, right? And if you go back even further, this was a support level at one point because it broke through, supported, and then broke down from there. So this kind of coincides with a lot of the price action that happened previously. So you got to think, you know, as it came back down below it, you know, the sellers were in control, right? And then the sellers were in control here. So if price is going to come back up, where would your target be? Wherever the sellers took control, because you don't want to miss that opportunity where it hits here, right, and then shoots immediately back down, because sellers are still up here trying to take control of the price of gold and move this thing back down one more time. Now, if they fail here, then yes, this thing could move up to the next zones up here and higher. But for the you know, for just this trade alone, we're gonna just say that, you know, within this day, that was a really good target to hit. So that's kind of how I do the analysis. When I look at top-down analysis, look at the price patterns and price action, support and resistance levels to the left of the chart, which would mean in the past, and that'll give you good areas to target and zones and everything like that. So again, you kind of see where my thesis and my bias changed, because, you know, overall I'm still always going to look for a short. I'm still going to look for a short, but not quite yet, because this thing might have some upside to it. But if it hovers up here and then it fails, comes back up, fails, I would look for probably another short as it comes back into the zone. Okay, but I would say the next trade would have to be, if this thing were to come back down, you know, probably the top of this zone right here, where market profile got broken, right, for the first time. because buyers are going to be, you know, obviously in control here. If it does come back down to retest, your initial first test is going to have a reaction to the upside, okay? And that way your stop is not a whole lot from that zone. So you're not going to be risking a whole lot, but you could make a nice little a move up and scale out on the way up. And then if it comes down and reverses and decides this thing is going to kind of come back and reverse and tank again, and this was really the strong sell price, then you change your bias and you start selling on the way down, right? But anytime it breaks anywhere here, right, breaks market profile, you wait for a retest and you buy. And this is on uptrends. Now uptrends can be, you know, your longer term picture, and then your short term picture, which would be day to day, hour to hour, right? And as day traders, you have to be flexible. You know, the overall bias will be you have to look for shorts, but in this instance, for this day, you gotta look at the uptrend that happened on Friday. It kind of consolidated sideways, kept showing support as it came back down. So you gotta say, okay, well maybe the sellers are not here at this price, and if buyers really take over, this thing could break above here, and where would be my next target? So this is kind of the thought process that you have to go through. Now overall, okay, you're not gonna think that this thing's just gonna shoot all the way back up to 1118 or whatever from last week. You're gonna say, okay, overall it's still on a downtrend. So as it comes up, I'm gonna get out at these target zones. Why? Because sellers were there and they're probably waiting for price to move up to get a better sell price, right? So that's kind of the thought process that goes into it. Good trade today. I'm looking forward to the S&P, like I said earlier, so I'll probably make another video later today on the S&P as I trade the East Coast. It's now, what time is it right now in Korea? 3:35 p.m. Made a little over $2,000 after lunch, and you know that's just how the market goes, and that's why I love these markets. You know, there's still going to be opportunities in oil. And this might be an opportunity here because it failed to break down and come back down further, and now it reversed, right? It could range, but like I said, I'm looking for a top of this channel up here. So if this thing comes back down and I'm looking for a nice little Fibonacci, it could be here, right? That could be the low. Looking for a nice retracement down to 47.99 to 47.96 maybe, you know? And then I could buy here with a stop, you know, at the 47.86, right? Because that would be the bottom of that initial move up. And then I would look for this thing to go long and probably target up at the top of this channel, which would probably coincide with some of these spikes over here on Friday at 48.38. So if that's the case, you know, you're making 20-30 ticks, at least 30 ticks off of that, and you're only risking about 10 to 15 ticks, right? So at 94. So at 94, if you're risking down to 86, you know, not even 10 ticks there, right? So you can give it 10 ticks just to give it a little bit of room. And then on the upside, you're looking for that 48.38, 48.40. I mean, you're making a you know, 4-to-1, 5-to-1 reward to risk there, or at least 4-to-1 reward to risk there. So you know, those are the kind of trades that you want to look into and trade. And it all goes back to talking about reward to risk, position sizing, and looking at probabilities. So let me just look real quick, and I'll show you on gold, you know, another opportunity. So if you didn't get it down here, if you see a huge spike up like that, you got to be patient, because you got to look at the bottom of that move and you go, okay, if it's going to come back down and I want to buy at a retracement, I want to see a really deep retracement, at least 70.5 or 76% retracement, because you're going to look at that and go, okay, where is that lined up at? It's actually lined up at the top of this spike over here before it broke and made that huge move, right? So first test of that area, which was also the first, which is also where the market kind of spiked up at the end of Friday, would be a great place to buy again. But I would not buy up here. If you're a zone trader, you would look at this breakout of this zone, and just on the 1 minute chart, you know, you could have made a little bit of money right here, because as it shot up and came back down immediately after it hit the top of that at 11,037, which I showed you prior as a resistance zone, you know, you could have bought at the top of the zone. And look how accurate that zone is that I made, because you got to look at the price action before, right? And this is why, you know, when you know how to analyze the market, I mean, no one told me that this is a price area. I created this zone way before then, right? But look how it just perfectly lines up, where it breaks through the zone, right? Comes back down, retests it. That could have been another buy opportunity here, right? And targeting, or at least exiting as it came back up here. And you don't never necessarily want to buy or sell at the top, right? You can sell at least 50% of that move, right? Came up, came down at the top of the zone, 50% of that move, scale out, maybe scale out some more at 75%, right? And that would have been perfect. And it came back down again. So now right here is kind of the initial support zone. So I'll go ahead and put an alert here, walk away from my computer and say, okay, if this thing comes back down below, now I'm going to look at the charts and see how far it goes down, see if it retraces down to these levels, and then look for another buy opportunity, all right? Because I missed this right here, but I already scaled out. You know, when you're trading, you got to learn how to be patient, and you also got to learn how not to trade or over trade. Okay, these are another tips that you can kind of hold on to and try. You know, the less you trade, the more, or at least the better your trades are going to be, in my opinion. If you over trade, you know, you're looking at the market at any given second and you're moving back and forth, you know, one, you're getting a lot of dings on your commission and losing money there. And two, you know, if you made money, walk away. You're going to have another opportunity. Look for a better opportunity. Don't look for this kind of opportunity, because that's not a good reward to risk. Because if you were to buy here, what would be your stop? Right here? No, your stop should be somewhere down here, right? Where it should truly retrace back down to. And then what's going to happen? You know, you buy here, it comes back down, you hold on, you decide to hold on, comes back down here, you can't handle it anymore, you get out, and then it hits the 76 and bounces up. And now you're just killing yourself over that. And then you get in again up here, then it decides it wants to fail and come back down. And it's just an endless cycle, right? So you just got to be patient, okay, guys? All right, I think I talked you guys' ears off. There was so many different lessons that you guys can learn from this. And I just wanted to kind of talk you through the different mindsets behind there, okay? And even if you're, I mean, I'm not going to advocate scalping, but you know, if you're buying a lot or selling a lot of contracts and you know that it comes to certain levels and you're willing to take a risk here and have a really small stop at the top of the zone, for instance, on the first test. And always remember, guys, if there's a breakout or breakdown, right, and it comes back and retraces, the best trades are going to be on the first test, okay? Not a second or third test, because you're going to realize that those areas are going to become weaker and weaker if the price doesn't continue going that movement in that direction after a breakout or breakdown. So for instance, if it broke out, came down for a retest and then bounced, right? See how that was the first test and it did really well there? Well, if it keeps coming back down, doesn't want to break up to the upside and stays right here, keeps testing that, you know, support now, because it was resistant, broke through, now it's support. If it keeps poking it, all right, this thing gets, this support zone is going to get weaker and weaker, and eventually it's going to fail, right? And you don't want to be there on the second or third test because of that, because you could have already made money right here. So as you can see, there was opportunities all day. Here, right, on this retracement, if you're a guy that were looking for a buy, right, here, which was where I took the trade, because I got now double confluence, knowing that, all right, you know, I already told you my mindset, but buyers were in control. Looks like buyers were definitely in control here, so that was an automatic buy for me. And then another really quick trade right here, where it came back down into the top of that zone that I drew in. And that was just contextual, because just knowing where the context of why I put that zone in helped me, would have helped me to make a decision to buy here as it came back down because it just initially broke into it, right? And if you're still selling the market, you know, as price broke up here, you could have been a guy that was up here and selling the first test of these nice low resistance areas right here. Okay? But those are definitely more riskier trades because once price breaks through this resistance zone, you don't know how much more this thing could move up. And there's not a whole lot of resistance here. It's not really that strong. You know, these are just really quick spikes, drop down, you know, and it broke down from here. But we also just broke this channel. There's a lot of little variables you got to think about that other traders are going to look at the market. And if buyers are really, you know, in control and they want to push this thing up, they could, you know, and you don't want to go against the momentum. And right now the momentum's to the upside. Okay. But this could come back down and then retest. And that would be a perfectly good trade right here as it comes back down for this retracement. Okay. I think this video is a lot longer than I wanted to go through, but there was a lot that I wanted to cover. I'm just glad I was able to share this with you guys. Really great trade. If there was anything I missed out or you guys have any questions, please let me know. And this kind of stuff that I live for, you know. But again, you got to understand the market. You got to understand how to manage your risk. You know, I lost a little bit of money on a trade, but overall my profit and loss statement for gold, I'm green, you know. So at the end of the day, that's what matters, and you want to be consistently making money like that. Okay. With that said, I'll close the video. Hope you guys learned a lot. If you guys have any additional questions or you want me to review anything here, just send me an email at iamjoeu@gmail.com. And let's see. Oh, and if you want to understand how to kind of build these zones and read technical charts a little bit better, just write in the email technical and give me a quick question, and I'll reply back about that. And then we can talk about it over Skype. I can review it over some charts if you guys have NinjaTrader or Thinkorswim or any chart for that matter, as long as it's a good platform and has a good charting platform or interface there. So, all right, guys, happy trading. Good luck. Make lots of money. Stay consistent. Stay disciplined. And ciao.